Everyone is exhausted. I see it in the comments, I see it on X, and I see it in the data. You have been told for 2 years that the institutional wave is coming, yet the price of Chainlink sits exactly where it was in 2023. But while the retail market is capitulating, selling their bags at a loss because they are bored, something massive just shifted behind the scenes. We now have visual confirmation connecting Chainlink directly to the private blockchain of the largest bank in the United States. At the same time, an on-chain metric that historically signals the absolute bottom of a bear market just spiked to all-time highs. The casino is closed. The easy money is gone. But if you are looking for the trade that defines the next cycle, you need to look at what the smart money is buying while everyone else is looking away. I'm deploying capital into this fear. Today, I'll show you exactly why and the specific levels I'm targeting. Let's be honest with each other. Holding Link has been painful. It has become a meme at this point, the stablecoin of crypto. We are looking at a chart that has effectively moved sideways for 2.5 years. While meme coins did 100x and then crashed 90%, Chainlink has just existed, chopping between $9 and $23 over and over again. Right now, we are sitting around $9 and $10. We are back at the bottom of the range. The sentiment is arguably worse than it was in the depths of the bear market. People are angry. They feel promised a revolution that hasn't reflected in the price. And that's exactly where we need to be paying attention. Because while price is stagnant, the fundamental reality has completely detached from the chart. We are seeing a divergence that rarely happens in efficient markets. Usually, price leads news. Here, the news is screaming growth, while the price is screaming death. And when that rubber band snaps, it usually snaps hard. Let's look at the hard evidence. This isn't speculation anymore. Look at this diagram. This is not some random YouTuber's drawing. This is the architecture of the future financial system. You see Kinexys by JP Morgan on the left. That is their private permissioned blockchain. On the right, you have Ondo Chain, representing real-world assets. And what's in the middle? What's the only thing connecting the bank's private billions to the public blockchain's liquidity? It's the Chainlink runtime environment. This confirms the thesis we have held for years. Chainlink is the TCP/IP of finance. It's the translation layer. If JP Morgan is going to trade trillions of tokenized assets, they are not building a custom bridge to every single DeFi protocol. They are using Chainlink. This is the plumbing. But plumbing isn't sexy, and plumbing doesn't pump overnight. That's the frustration. However, the team knows this. Look at what happened on January 29th. The Chainlink Reserve made its largest purchase to date. They acquired 99,000 Link, bringing their total holdings to 1.77 million tokens. Why does this matter? Because insiders and treasuries do not buy aggressively when they think the project is dying. They buy when they know something the market has not priced in yet. Now, I have to address the elephant in the room, the bearish argument. And frankly, it is a valid critique. We saw this comparison between Chainlink and PayPal recently. The argument is that buybacks are not enough if the token emission, the inflation, is too high. PayPal spent $6 billion on buybacks in 2024, yet their stock has been flat for 5 years. The fear is that Chainlink is just releasing tokens faster than demand can soak them up. That's the risk. We cannot ignore it. Profitability matters. But here's the counter-argument. Look at the revenue dominance. Chainlink generated over $14 million in protocol revenue over the last 90 days. That's 90% of the entire interoperability sector's revenue. Its closest competitors? Debridge did 1.4 million. Axelar? 0. Layer 0? 0 reported in this specific metric. Chainlink has over 800,000 holders. The next closest competitor has 22,000. We are comparing a monopoly to startups. If value is ever going to accrue to an interoperability token, it will accrue here first. The moat is simply too wide to cross.
Now, let's move to the chart. This is the weekly time frame. First, the exponential moving averages. It's ugly. We are below everything. We are trading below the 10 and 21, those are the blue lines. We are below the 55, the purple line. And crucially, we are below the 200 simple moving average, the green line. In technical analysis, being below the 200-week moving average is usually a do not touch zone. It signals a macro downtrend. However, context is key. Look at the Heikin-Ashi RSI at the bottom of the chart.
I have circled the previous times this indicator hit these oversold lows. Every single time it marked a macro bottom or accumulation that was followed by a decent rally. We are flashing that same oversold signal right now. We are also pressing against a massive descending trendline that has been pushing price down since the local top of $26 in August 2025. We are getting squeezed between this trendline and our horizontal support. Speaking of support, let's talk about the supply and loss metric from Glassnode. This is the most important link chart I have seen this week. The blue line represents the total amount of link held at a loss. It just spiked to between 400 and 450 million tokens. This is historic. It means almost every single person holding this token is underwater. Why is this bullish? Because it represents capitulation. The weak hands have already sold. There's no one left to sell. When everyone who wanted to sell has already sold, the price stops going down. It is simply a lack of sellers. This matches perfectly with our demand zone on the price chart. So, how am I playing this? I'm treating this as two separate positions, a long-term accumulation and a short-term trade. For the long-term bag, I'm heavily accumulating in this green box between $9 and $11. This is the value zone. If you believe in the JP Morgan integration, if you believe in the tokenization of real-world assets, buying Link here is an asymmetric bet. I'm not selling this bag until we see new all-time highs, potentially years down the road. For the short-term trade, I'm taking a position here with a very specific invalidation. My stop loss is at $7.50. This is the red dashed line on the chart. Why $7.50? Because that is below the wick from the October flash crash. If we close a weekly candle below $7.50, the market structure is broken. It means the support has failed, and we could see a flush to $5. If that happens, I'm out of my trade. I'll take the loss and look to re-enter lower. But the upside? My first take profit target is $13. This is the 236 Fibonacci level and a major resistance zone. If we clear that, my next targets are $16, $19, and $22. The final targets for this year's setup are the range high at $26 and $45. Not much realistic for this kind of bearish environment, but who knows? From $10 to $26 is a nearly 160% move. Risking a 25% drop for a 160% gain? That's a 6-to-1 risk-to-reward ratio. That's a trade I'll take every single day of the week. We also need to watch that descending trend line closely. A weekly close above that trend line would be the confirmation signal for the reversal. Until then, we are just accumulating at support. The game plan is simple: patience and risk management. The risk is that the market continues to bleed and Link loses the $8 support. If Bitcoin decides to correct another 20%, Link will likely break down. That's why we have the stop loss. But the reward scenario is that the supply and loss metric is correct. It suggests that the sellers are exhausted. If we get even a small catalyst, a partnership announcement, a shift in Bitcoin dominance, or just a relief rally, Link is coiled tight enough to outperform significantly. Chainlink represents about 3% of my total portfolio. My main bags are still Bitcoin and Ethereum, making up 70%. This allows me to take this risk on Link without losing sleep if it goes wrong. I wrote this to my private Telegram group earlier, and I want to say it to you now. The 2021 casino is closed. The market has matured. It requires actual skill now. This pain you are feeling? It's just the filter. Most people will quit inches from the finish line. Do not fold now. Stay focused. So, if you want to see exactly when I buy and sell and get these updates faster than I can make a video, join my free Telegram group. The link is in the pinned comment below. And if you are wondering what's happening with the broader market that could trigger this move, watch this video on Bitcoin next. It explains the macro scenario that sets up this entire trade. Thanks for watching, never financial advice, and I'll see you tomorrow in the next one.